You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 14th day of August, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you cannot see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, there's a big microphone. Can't miss it. Click that, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. It also gives you access to the chat box. This way you can ask questions and participate in the discussion throughout the entire broadcast. Okay? Now, if you're out of your office, away from your desktop, just point any internet connected browser to cfrn.net/live. There you'll find a live real-time simulcast of the show as it unfolds. You just won't have the chat box. We do stream live on social media during this show, Facebook, YouTube, and Twitter. Let's open with a word of prayer. Father, I just want to thank you today for all of your blessings, your mercy, and your grace. You've been so good to me, to my family, and to our community here. We thank you, God, for the strength that you give us each day. And God, I thank you for all the people who surround me every day, the people who you, by divine appointment, have placed in my life, the people who make my life more meaningful. I thank you in Jesus' name. Amen. All right. Happy Friday. Who's not glad it's Friday? Everybody's glad it's Friday. It's the happy day. All right, let me pull in some fresh data, and I'll go over the numbers from around the world. These are the cash markets, the indices. I talked a little bit about this in the workshop last night. How you can't trade the actual index, like the S&P 500 index. It's not tradable. Man had to create derivatives, futures and options and other things. Same with the Dow, NQ, Russell, etc. Currently, the Dow is up 45 points. The NASDAQ is down 27. S&P 500 is up 2. Russell 2000 down 1.5. Quiet sideways trade is about the best description I can give this market right here, right now. In the commodity basket, crude oil down 13 cents, trading 42.11 last. Gold down 21 bucks, trading 19.49.30 last. That's a drop of a little over 1%. Silver down $1.06, trading 26.65 last. That's a drop of almost 4%. In the Asian markets today at the close, the Nikkei posted a gain, just 39 points. Shanghai gained just 39 points. For the Shanghai, though, 39 points, that's a gain of a little better than 1%. And the Hang Seng dropped just 47. More quiet sideways trade. And in the European markets at the close, which was 30 minutes ago, almost 40, FTSE down 95, which is 1.5%. DAX down 92, almost 1%. And the CAC down 79, 1.5%. Maybe if I move that trash can, I won't put my foot in it anymore. That would be good. All right. We've got a mixed day in the Asian markets, or we had. Their week is over. It was a red day in the UK. It's a mixed day here in the US of A. You've got the Dow and the S&P barely in the green. NASDAQ and the Russell just barely in the red. Now, we'll go to Michael here as soon as he's ready, and we'll get a recap of everything that happened this morning in the live training room. We have 2 hours of live training every day, Monday through Friday, from 9:30 a.m. to 11:30 a.m. Eastern. That's where you learn our core methodology, our core strategy, which is incredibly simple. Everything we do around the clock, 24 hours a day, 5.5 days a week, is based off the principle that you learn in the live training room. Sometimes people look at my 30-minute chart and then they look at the range chart we train on in the room, and they go, well, which one should I choose? That's the good news. You don't have to choose. It's the same thing. The only difference is the time frame and the amount of risk that's required. In the live training room, we only risk 8 ticks on every trade, because we're not there to teach you so much. The thing we're there to teach you about the stop loss is you got to have one. Got to have a hard stop on every trade, otherwise it's not trading, it's just gambling, right? You've already had enough gambling results, you're ready for some business results. So, always got to trade with a hard stop. Once you learn the strategy, once you learn how to spot the setup, how to execute it, how to manage it, how to exit, then I will teach you market structure so that as you move into larger time frames, you'll be able to push and position your stop loss where the market tells you to put it. Not a formula, not a ratio, not a percentage of the ATR. And those are all ways that people do use to assign the stop loss. But we take a different, perhaps crude approach in some eyes and an elegant approach in others. We just let the chart tell us where the stop needs to be. On the Concierge Trade Alerts and on the Logic 247 alerts, we do not risk more than $300 per contract per trade, less when possible. And that's based on the 3-step methodology that I teach all of our traders on how to set the stop loss using market structure. I can usually teach it to you in one personal mentoring session. All of our members have unlimited access to one-on-one mentoring. Each session is 45 minutes. New people should probably book a couple sessions the first week, a couple sessions the second week if you need it. Because you've got live training every day for 2 hours in the morning. Then you have this 2 hours in the afternoon. And the Telegram channel is open 24/7. You can always ask questions and get answers there. Is that you right here, Michael?
Yes, that is me.
Okay, we were just waiting on you, so you can take it away.
Here I am.
Okay.
All right. Here we go. Let me bring this up. And then bring this up. Okay, here we go.
Okay. I can see your charts. Here we go. Okay, loaded. All yours.
Here we go. Now, I'm going to do it this way, and over the weekend, I'm going to have to do what we talked about last night. But EminiFuturesTrading.com, yeah, I have it written down right here. Okay. Let me see who's in here right now. Okay. So none of the people that I have meetings with this afternoon are in here right now. All right. Well, anyway, it doesn't really matter. If you have not taken a free trial and you want to take a free trial, you can go directly to this page, EminiTrainingschool.com. You can go to EminiFuturesTrading.com. You can go to CFRN.net. Any one of them, and you'll be brought to a page like this where all we ask for is your name, your email, your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. Okay, you must click on the confirmation link. If you don't click the link, we don't know you took the free trial. Okay, what the heck? Okay, spreadsheet. If you're going to read the spreadsheet, you're going to read all the CFTC risk disclosures down at the bottom. Today's the 14th day of August 2020. We were plus 15 in the euro and plus 59 in gold. Put us at plus $683.75 per contract on the morning session. Today, it took 18 minutes and one trade to get to the goal for the day. At that point, we're up $110 a contract, and we took a total of 7 trades this morning. So on the month now, we're at $3,948. That's over 10 days, averaging $394 per day. Today is the 125th consecutive day of getting my goal. And on the year now, we're at $57,259. That's over 150 trading days, averaging $381 per contract per 2-hour day. And as you will soon see, I miss most of the trades. But look at all the ones in here. Now we're on our 10th trading day, and 8 out of 10, we got the goal on the first trade. These are unprecedented times. If you are not trading futures, I don't know why. Okay, let's start out with the gold, right? Because that's where we made the money today, really. We're going to go right back to the beginning now. Okay, go. Now, right here at the open of the market, the cycle was going up the wrong way. See, we didn't have any trades. Then right here, well, you could argue that there was a trade here, but we didn't really have a good trend. Once we did establish a trend, we took this first trade right here, and we actually got positive slippage on that. We were plus 11 ticks on that one. There was no trade there, no trade there. I think I took all the trades that I could take, not counting the YBR trades. On this trade, we picked up 13 ticks, put us at plus 24. There's a nice YBR trade right here. And then right here, we picked up another 7 ticks to put us at plus 31. And another 13 ticks to put us at plus 44. 4 ticks to put us at plus 48. And 11 ticks to put us at plus 59. Okay, then it got really choppy after that. You know, there was a long trade there that I missed that you could have taken. Let me show you. There was a YBR long right here that would have been a break even. A YBR long right here that would have worked out just fine. But you see, we get into this period right here. You see how choppy it was in there. Now the YBR was giving off trades. You know, it had a short right there that would have worked out just fine. It had a long right here that would have worked out just fine. It had a long right here that would have been a break even, probably. Depending on where you got in, you might have stopped out. A short right here that would have worked out. A short right there that would have worked out. But you see in here, the regular trade setups, we didn't have a trend. That's why we weren't doing anything. We finally established a trend over here. But then we got into the break. Now, during the break, let's see. There's a YBR short right there that would have worked out. YBR long right here that would have been a break even. This is all during the break. A YBR long right here that would have worked out just fine. A trend line, a BBC trade right here, bounce off the BBC, that would have worked out just fine. And a YBR short right in here that actually doubled up on itself right there. That would have worked out. That was gold this morning. So we were pretty active with the gold. Now on the euro, we just had one trade. You can see the whole day in the euro right here on one screen. That says a lot. There was, this was going into the high of the day, so we weren't going to do anything with that. But it pulled back and we grabbed this one right here, and it ran up 15 ticks. Actually 16. I was expecting 15, and so I took 15. Then we had a long right here on a close up above the trend line, and then it just got choppy. Okay, that was the euro. Now, crude oil. Again, crude was disappointing. I didn't trade it at all. There was really nothing worth trading in crude. There was a YBR short right in here that you could have taken that would have worked out. But there was really nothing worth trading in crude. The ES was just hugging this weekly trading zone all day. And so, for that reason, we did not trade the ES either. Now, let's see. Was there an opportunity? I'm looking down at the slingshot, but every time I look at the slingshot and I see nice separation between the green line and the cycle. Then I have to look and see if we have a trend. And, in most cases we don't. Once it clings onto a weekly trading zone, like this one right here, it can be very choppy. And it was. There was one trade opportunity right there. Then we get into the break, and during the break, there was one YBR trade right here. And that was pretty much it. There's a YBR trade right now that'll probably get down to the zone. Looking at the numbers, it should get down to 33.68. I said it was going to get up to 33.73, and we got up to 33.72.75. Well, I thought it was going to get up to 33.73. Dwayne's going to go over all that in the bigger picture for you, but I just wanted to go through what I was seeing this morning on the smaller time frame. Today, as I said, if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the 14th day of August, 2020. Today we made 15 ticks on the euro, 59 ticks on gold. Put us at plus $683.75 per contract this morning. It took 18 minutes in one trade to get to the goal for the day. At that point, we're up $110 a contract, and we took a total of 7 trades this morning. So on the month, we were up $3,948. That's over 10 days, averaging $394 per day. We're on 125th consecutive day of getting the goal. So again, I'm going to tell you, these are unprecedented times. I've never had 125 straight days without, one red day or blue day. But it's been, since Valentine's Day. On the year now, we're at $57,259 a contract. That's over 150 trading days, averaging $381 per contract per 2-hour trading day. To take the free trial, you can go to eminitrainingschool.com to sign up for the free trial. To become a partner, go to eminifuturestrading.com and just follow the instructions. We don't ask for a lot, and we have a new structure. Okay. Oh, here, I'll do it. Oops, hang on. There it is. Emini Futures Trading. Nope, that's not what I meant. Nope. Yeah. There it is. There it is. Okay. Here you go. Allows you to trade with confidence, not fear. Start. No, I was just finishing up, so I can pass it back out to fabulous Phoenix, Arizona. Studio A overlooking South Mountain, America's largest city park. And clearly you are there.
And to those of you listening on the YouTube stream, you were just cheated out of one of the single best monologues I've ever done. Just kidding. I'm sorry. There was a brief silence there of about 3 minutes. That's because the CGO, the Chief Guessing Officer, I forgot to unmute the mic on the YouTube feed, so oops. Okay, let me take the charts. Recap.
Take the charts over. The recap of the recap. Today it took 18 minutes and one trade to get to $110 per
Good
card.
job.
Thank you.
Now,
Denise, what
go ahead.
email did you use? Yeah. Just type it in. Okay.
Now, in the morning, guys, in the room where Michael is teaching diligently every day, our strategy, every bit and piece of it, 2 hours a day, Monday through Friday. He's got a goal of a couple points. That's $100 in the S&P 500. Okay. Once he reaches that daily goal, he then kind of swings into training mode, but he still puts on and takes off trades in live markets, real time. Your goal in that room is not so much to try to make money off of the trades he calls out. I mean, you could do that, of course, but you're always going to be just a couple ticks behind. What's really important, what you're in that room to learn, is what it is he's doing, but more importantly, why is he doing it? What's the reason? Why did he just go long on the S&P? Why did he just take that short on gold? See, because at the end of the day, you want to be able to go and trade for a couple hours on your own away from the sound of his voice and try to do what he did. It's the fastest way to learn what you don't yet know. Because without the sound of his voice in your headset, and you're just staring at the chart, okay, now I think he said, okay, and then I do this. Now he's got that handout he gives you, which is very helpful. It's the 5 steps to putting on a trade using our most basic setup. And by the way, that basic setup, it's fluid across all markets, all time frames. Want to trade gold on a daily chart? It works. Want to trade the S&P 500 on a 5-minute chart? It works. All markets, all time frames. So again, you're encouraged to trade along with him in the room using your demo account, your simulator account. But once you become a member, the first requirement of the 2420 blueprint, that's the CFRN manifesto, is that you put together 10 consecutive days in a row in sim where you reach your daily goal in 10 trades or less. Because once you reach that goal, then the blueprint's going to give you the green light to actually go live with real money. Only one contract. Now your goal is to increase your account balance by $2,000. Once you accomplish that, the blueprint will tell you it's time to add a second contract. Now what's different about the second contract is you're adding that with profit you earned in the market. The first contract, you've got to fund that with your savings, the money under your mattress, wherever you get your cash. But if you're following the blueprint, at contract number 2, everything changes. Because now you're operating a profitable trading business. You just doubled your production using profit you earned in the market, not outside funding. That's a big deal. The blueprint will tell you when it's time to add number 3, number 5, number 10, always increasing, just one at a time. And when you add the third one, the blueprint's going to have you trade there for a while so that you get acclimated. And then it'll tell you when it's time for number 4. Anytime the blueprint tells you, hey, you should be adding another contract tomorrow, if you don't have the profit available in your account to underwrite adding that contract, then you don't add. You have to wait until you can add it with your profits that you earned in the market. This way, you always keep it a profitable trading business. Anytime that you have 2 days in a row back to back after you go live where you do not reach your goal in 10 trades or less, you come out of the live, back into the sim, you immediately book a mentoring session with myself, with Michael, with both of us, so that we can walk through your trades with you, help you discover why you had those 2 bad days. Is it something you did, something you didn't understand, or is it because market conditions were not proper at the time you put on and took off those trades? So we'll help you troubleshoot that. We'll help you figure that out. Then you'll trade another day or 2 in sim just to get your confidence back because you're probably pretty rattled. I want you to know that going from live back to sim is not a walk of shame. It's a smart business decision. It's how you keep your business alive. It's how you know in the morning when you wake up that this is not the day you're going to blow up your business, because you now have a set of guidelines, you have a set of rules, and you are not going to violate them. Or are you? You see, it always comes back to you. It comes back to your self-discipline and your self-control. So while Michael is showing you how to find these trade setups 2 hours a day, 24 hours a day, we're handing you these pre-packaged, ready to go, ready to trade setups. The Logic 247 alerts come out around the clock in the private Telegram channel, 2 a.m., 2 p.m., whenever opportunity presents itself. That's what we love about the futures market, is we're not locked into having to just trade from 9:30 to 4 every day. We start trading Sunday night at 6 p.m. Eastern, and we trade around the clock until the markets close Friday afternoon at 5 p.m. Eastern. Now, those Logic 247 alerts, because they come out live in real time, that's dynamic. But the Concierge Trade Alerts, which come out at the beginning of each Globex session, that's a static report that gives you your fixed support and resistance for that session. Okay? If we get above the long number, then you only want to be trading long. When we get below the short number, you only want to be trading short. Everything in between is the market making up its mind. The Logic 247 alerts will typically walk you right up to the door of the CTA or right down to the CTA. On every alert, the final trade to target is the weekly trading zone. The zone above on a long, the zone below on a short. Our partners get the weekly zones every Monday morning at 6:15 a.m. Eastern. Get them on your chart right away, because that's your fixed support and resistance for the entire week. Okay? Now, as we get into the charts here, I'll show you exactly how price works around the weekly zones, fixed support and resistance, the CTA's daily fixed support and resistance, and the dynamic logic alerts and the BBC. Okay? All right. Let's start out here. We are in week 106 of Logic 247. Concierge Trade Alerts, we've been publishing those for about 6-7 years. Weekly trading zones have been published for our members since December 14th of 2009. So we're in our second decade of those. And our 24/7 alert service we launched 106 weeks ago. Now this week, since Sunday night at 6 p.m. Eastern, up to this morning at 11:35 a.m., we issued a total of 92 alerts. Still waiting on the results of 9. 18, price moved so far away from that area, we've simply written it off, marked it never triggered, because it never triggered. So, out of the 92 total, we had 65 alerts that were actionable. Okay? Out of the 65 alerts, 7 got stopped out based on not risking more than $300 per contract per trade. So that represents 11% of the actionable alerts. That's not a typical number. What we've averaged over the last 106 weeks, 20% of Logic 247 alerts do get stopped out based on not risking more than $300 per contract per trade, less when possible. So if you have 65 actionable and 7 get stopped out, that leaves you with 58 individual unique opportunities in the market to get your goal for the day. With 5 days in a week, that's a little better, I think, than 10 a day. Spread across S&P, Dow, Russell, NQ, Crude, gold, silver, occasionally the euro, British pound, Canadian dollar. Okay. So, week 106. Now, let me do this. We're going to go down to the actual alert channel so that you can see what it looks like when it's happening. Last week, which was week 105, we had a total of 89 alerts. 66 were actionable. 12 got stopped out. So this is a more typical number. 18% on the week were stopped out. So if you take 66 and you minus 12, what does that give you? 54 individual unique opportunities to get your goal for the day over the week. So last night, 6 p.m. Eastern, last Sunday night, 6 p.m. Eastern, the times you see here are Pacific, because I'm on Pacific time. Phoenix doesn't do, Arizona doesn't do daylight savings time, so 8 months of the year, I'm on the West Coast. The way you read these, the alert says to be long 3350, initial target 3352, second target 3354. The swing high of the move was 5550. So from 50 to 5550, it's $250 per contract traded. On the Dow, be long 27390, initial target 410, potential resistance 440, so that's your second target. We made it up to 468. So from 390 to 468, that's about 70 points at $5 a point. S&P is 50 a point. The Dow's 5 a point. $350 per contract traded. On the Russell, be long 1571, initial target 73. We made it up to 7630. Okay, so that's 5 points, $50 a point, $250 per contract traded. NQ never triggered. Had a PT on Crude. That means it made it 60% of the way or better to the initial target. Gold, be short 2032. We dropped to 2028. Okay, the initial target was 3031. Potential support was 2028. So we just went 2 ticks over the line past the second target. So 2028 to 2032, that's $400 per contract traded. No trigger on silver. There's a British pound, 10345, all the way down to 13021. Euro, we had a PT, no trigger. Now that all happened Sunday night. Okay. Now, these are always available for you to see. Of course, members have access to all of this going back 106 weeks. But you can see what the alert was, 51 to 53. The swing high was 53 1/4. Here, a short from 33.42 down to 33.40. The swing low was 33.29. So that was a 12-point move at $50 a point. That's $600 per contract traded. Here the idea was to buy 27,485. We ran up 100 points, $5 a point, $500 per contract traded. Here's the Dow. Russell, 1577 to 1579. We actually made it up to 1580. It's 2 points, $50 a point, $100 per contract traded. NQ, short, PT. First stop out of the week, crude. Here's gold. Buy 2051, initial target 2052. We made it up to 2060. That's $900 per contract traded. So I'm not going to do the numbers on each and every one of these because, again, they're available for your inspection. We're very transparent with everything we do. We publish these alerts live in real time before they trigger, and then we come right behind them and we recap them and let you know how everything turned out. Okay? There's the next stop out on Russell. There's NQ, there's crude, there's gold, silver. Stop out on the S&P. No trigger on the Dow. Stop out on the Russell. There's crude, S&P. Short on the Russell. Now, this one dropped from 52 to 68, so you can do the math. That's 4 points, $50 a point, $200 per contract traded. And you'll notice the times. Remember, these are Pacific, so if you're on Eastern time, just add 3 hours. S&P, Dow, Russell, NQ. Now, it's very, very, very important that you never trade an alert just because it's an alert. Sure, you might make some money, but you're not learning how to trade. The idea here is to teach you how to trade, to teach you how to find these opportunities yourself, so you're never dependent on people like us again. Because you know how to trade, okay? If you're a certified mechanic, you don't need a mechanic guru because you already know how to do mechanic stuff. I don't. I wouldn't qualify. I'd be at the back of the class. My wife is the handyman in our house. She does a great job. Here's a long on the S&P, 63 to 65. We made it up to 68. 5 points, $50 a point, $250 per contract traded. Stop out on gold. And this should bring us right up to today. Today being the 14th. Okay? Here's the 14th. This is where the bulk of the ones that we're still waiting on a disposition for. These were put out this morning in the pre-market strategy session. Okay? So those of you that were in there, the first pre-market strategy session alert that we... Now, in the pre-market session, I'm showing you my charts, and you're actually watching me compute these alerts, put them on live in real time. I don't know of any quicker way to show you how it's done. Here's the NQ, hit the target. Got a PT here on crude. And all the others, because they were just published and we have sort of a sideways market, we're still waiting. Now, all the stuff I just scrolled through, it's all summed up in this recap. 92 alerts, still waiting on the results of 9. 18, we wrote them off because they never triggered. 65 actionable alerts, 7 stopped out. Not a typical number. The typical number is 20%, but we humbly accept and are grateful for a good week so far, 11%. The final recap will be issued this afternoon when the markets close. Okay. Now, that's the logic alerts. Those are the ones that come out to you around the clock in real time, 24/7, in the private Telegram channel. The ones I'm about to show you are a little bit different. These are based on historic price action. I issue these shortly after the Globex Open. Okay. So last night, the 13th, got them out at 7:50 p.m. Eastern. It's usually closer to 6 p.m. Eastern. That's when Globex markets open. Last night at 6 p.m. Eastern, that became officially the Friday session. When the Concierge come out, because these are going to be fixed support and resistance for the entire day, just like the weekly trading zones are fixed support and resistance for the entire week. Go put a line on your chart. Okay, everything that happens in between is the market trying to make up its mind. Now, because some of these have not triggered, now we expect on most days, what we see is these alerts will trigger multiple times during the same session. But you got to check the chart before you place the trade to make sure that current market behavior, because this is based on historic price behavior, you got to make sure the current market behavior supports the alert, because this was issued at 7:50 p.m. last night. Now here it is, 12 noon the following day. Well, market structure has most likely changed to some degree. So you got to make sure this is still proper based upon our strategy and our indicators. Okay, and we teach you how to do that. All right. So if you got your screenshot, we cover everything from the S&P to the Dow to the Russell to Crude, the NQ, 10-year notes, gold, Canadian dollar, euro, British pound, silver. Okay. So let's jump to the chart. What we were talking about this morning in the pre-market strategy session, overhead, we've got the all-time historic high of the S&P 500 E-mini based on the current price of the December contract, 33.96.5. This area, which we highlighted as potential resistance for that very reason, because it's the all-time historic high, we've come up against it 1, 2, 3, 4 sessions, pretty much the entire week, and we keep getting turned down. The highest close, or the highest intraday we had was Tuesday, 33.82.5. Oh wait, is that Wednesday? Let's see. Today, this is Friday, Thursday, Wednesday, 33.82.5. Yesterday the high was 33.82. So far today, 33.80.5. So while it's hard to see, we've got a high, a lower high, and another lower high. This morning in the pre-market session, we had a little red body below blue and climbing. So price, and it still is trapped between blue and climbing, which from this position represents really resistance, and the step line below, which represents support. So I gave everyone the numbers this morning in the session. Okay, if we take out the session low, that gives us a window of opportunity to trade down to this daily low. If we get through there, this daily low, and then after that, it's pretty much a beeline down to the BBC. Now, price always reverts to the mean. What does that mean? I'll show you. Put it back on the daily. All right. After we got this bullish cross back in July, the market put in a leg up to the area that we expected to be good support, good resistance. And it sent us back to the BBC. Another leg up, back to the BBC. Another big leg up, back to the BBC. Another big leg up. If this is it, if this is the high, then the shallowest retracement would be here. The 24% Fibonacci retracement of the last leg up. That's from this low to this high. 24% fib, which as price comes down, we expect that to be good support, at least good enough for a bounce. Also, when price comes down to meet the BBC, we expect that to be good support and good for a bounce. Okay? Does that bounce become a reversal? We'll have to wait and see, because remember, we don't know the future. We just know what the next high probability move is. And I know that just looking at the daily chart, because we're printing a doji, which represents indecision, price can go either direction. What price is attempting to do right now, buyers are dead set on breaking this swing high at 82.5. That gives them a shot at the all-time high. Okay? Sellers, institutional sellers, they want to take out this swing low right here, which then opens the door for that move we just talked about down to the 24% fib and the BBC. If that term BBC is new to you, and it probably is if you're new, because we made it up, it just stands for bull bear cross. Okay, nothing fancy, nothing sophisticated. As price was climbing back in January, we put in a new all-time historic high. When price can't go any higher, resistance, then it's going to go look for support. It found support on this pullback to the BBC, which is what we would expect. Okay, that support took us up to a new all-time historic high, 33.96.5, based on the current December contract price. You'll notice when price is above the BBC, it just keeps rising. As long as price is above the bull bear cross, the green line, we anticipate higher prices. When it gets below, we anticipate lower prices. So after this retracement, support, resistance, here, this is a Sunday night, we gap below the BBC, we open below, we close below, we challenge this support, and then everything else the history books will remember as the pandemic crash, which found its bottom on March 23rd. Now, what happened here gave us some really important information about the future. Now remember, the indices are created to go higher. Yes, I know they have sell-offs, I know they have retracements and reversals and crashes and stuff, right? But over time, look at any one of the indexes, S&P, Dow, Russell, NQ. Go to a chart where you can get the continuous daily chart all the way back to the inception of those markets. What has it done over time? It's gone higher. How's that possible? Well, I'll tell you. The S&P is an example. It's 500 large cap companies. Whole list of qualifications to be included in the S&P 500. It's a very coveted position. Gives you panache. But once a company meets the qualifications, they are expected to continue to outperform all of their counterparts and contemporaries. If a company that's part of the S&P 500 starts to get sick, maybe they miss their numbers a few times, revenues are down, income's down, whatever kind of woes they're having, well, the folks at Standard & Poor's don't want all the other companies to get infected, so they just boot them to the curb. They bring in another company to replace them, a healthy, strong companies that just reported earnings and beat their numbers. In fact, the last 3 times they reported earnings, they beat their numbers. So out goes the weak, in comes the strong. This is why, over time, S&P, Dow, Russell, NQ will continue to go higher as they have done since the inception of the markets, which explains why, in the midst of all this pandemic tomfoolery crash, we weren't concerned, because not only did we know price would come back, we knew where we would find resistance on the way back up. This support based purely on technical analysis 101, we know that at some point that will in the future become resistance. Bearish cross. We know that when price finally makes its way back up, that's going to be good resistance. And when price finally makes its way back up into the area of the all-time historic high, that too will be good resistance. So if we scoot back to the right side of the chart, here's what happened when price hit that first area. That's this one. See how price hit it? Support became resistance. Steep drop, caught by the BBC, sent back up. Okay? Now, the next dynamic that came into play was as price was trying to go higher, it was running into red and falling. This indicator, the official name is the CFMA1. I refer to it as blue and climbing, red and falling. As you can see on this big move up, price was climbing the back of blue and climbing. Okay? Now, because of this retracement, blue and climbing became red and falling. So, that represents resistance. So we spiked it, and spiked it, and spiked it, and spiked it. Actually closed above it here, only to quickly reverse the next day. And it wasn't until June 30th that we were actually able to close solidly above red and falling, above the BBC. So our first area of resistance was respected. We get back up there and it's respected again. It sends price all the way back to the BBC. That support sends us up to the next area of resistance. Oh, that's the same one. We struggle, we finally get through, and now we're able to get up to the resistance area created by the bearish cross. What does that do? Same thing, it sends price back to the BBC. The BBC does the same thing and provides good support and sends price back up through this area of resistance. And then we had a big trade on here, this window of opportunity. And then
here are matches for resistance.
And then we finally got up to this area right here that we've been struggling for 1, 2, 3, 4 sessions to get through. If we can close above the Wednesday high at 82.5, that's when we begin the run to the all-time high at 96.50. This is an important day. Failure here means there is a good possibility, if not a probability, that we would actually see the BBC before we see the all-time historic high. If we get a strong close today, then we'll be trading long on the upside Sunday night once we get above these highs. We're not going to trade long into that based on a daily chart. That is as solid a resistance as you can find. Now on the intraday chart, there will be opportunities to go long up to this area. So let's go to the 30-minute S&P chart. Now at any time, if you have any questions about anything I talk about, anything I cover, maybe I use a buzzword, WTZ or BBC or red and falling. If you don't know what that means, just type a question into the chat box. Okay? We're streaming in so many different places. Each place has its own chat box, but I can't monitor all those chat boxes at once. So if you're logged in through the link on the home page, or you got an email that allowed you to join with one-click access today, you do have access to the chat box. So please, any questions, just type them in. I'll be happy to answer them for you. Okay? All right, last night on the S&P, the alert was to be long. Now we're going to the 30-minute chart. 33.85. Okay, that hasn't triggered. We had an alert this morning to be long at 33.73. Price walked up to 33.72.75, one tick away from the trigger, and said no. Now, why did the market run into trouble here? Okay, take a look at this. This is the bearish cross. I just showed you what a bearish cross looks like on the daily. Here's a bearish cross on the 30-minute. This is where the red and falling gets below the BBC. That, on the way back up, becomes resistance. Okay, so hopefully you can see that. Okay. So until we can get above that, we can have no interest in going long. Once we do go long, and there is an alert in the channel right now to take advantage of this long opportunity, but we got to get above these highs, okay? And then we've got an opportunity to be long up to the potential resistance right here, and here, and then here, right? So we got to clear all of those. So we had an alert yesterday to be long at 33.85, and because of the sideways movement of the S&P, that hasn't changed. Last night, the short side for the S&P was to be short 33.62. 33.62. Okay. From 33.62, the trade to target is the weekly trading zone below. Every long alert, the final trade to target is the weekly zone overhead. On every short alert, logic or concierge, the final trade to target is always the zone below. So from 62, now the actual zone is 33.53/54. Because the zones are fairly close together this week. I'm just using one line, but this is how the zones, if you go back and look at previous broadcasts, you can go back and watch every afternoon show for years at youtube.com/CFRN. And if you're new, I suggest you spend some part of your weekend doing exactly that. You don't have to watch every 2-hour show. But go back a week, go back a month, go back a year. Fast forward up to the part where I'm doing this recap here. It'll help you get up to speed so quick on the very basic, simple strategy that we use. Okay? So, from 33.62 down to the target at 54, that is 8 points at $50 a point. It's $400 per contract traded. That one trade right there pays for an entire month of everything that we offer. Everything. Pretty incredible, right? I think so. But hey, perhaps I'm jaded in my opinion. So in this morning in the pre-market strategy session, we said we got to get above this area. I gave out a make or break number at 33.76. We do have an alert at 73, but my make or break number was 76. We get to 76 or above, then we're only looking for long trades. I think this business right here may still be part of a head fake to the upside. When will we know? We'll know if price trades back below the weekly zone. It starts to take out these swing lows. Right here, this could be support, 33.59. So there's an alert in the channel for this, and I believe that alert says 33.57 down to 33.54. So we have alerts in place to cover the long side, short side. We don't control the markets. We don't know what's going to happen next. We do know what the next high probability move is. Okay? As price pulls into the BBC and the weekly trading zone, both of those represent potentially good support. How will we know if it's good support? Because when we get our next candle in 23 minutes, it will start printing green. If, when we get the next candle, price has gotten below here and below the zone and is printing a red candle, then we know we need to start looking again for trades on the short side. Now, the methodology and the strategy that you learn in the live room each day, that's what's under the hood here. Only difference, time frame. Okay? And what are hard and fast rules in the live training room become more like guidelines here. What we do in the room is we teach you how to become a mechanically based trader. If you choose to take that knowledge and then go on to become a discretionary trader, that's where I'll step in and help you. We'll do one-on-one mentoring sessions in the afternoon, and I will teach you how to take all of that knowledge you learned in the live room on the fast-paced range chart, and I'll take you into a somewhat more leisurely world where you can kind of put your feet up on the desk, watch the market, let the trade come to you, and all you got to do is execute. Now, again, our goal is to teach you how to trade, to teach you how to find these opportunities. The best way I can teach you how to find opportunities is to show you real-time opportunities as they develop around the clock all week long. That's what the channel is all about. Okay, both channels, the Concierge and the Logic. You're only going to get one message in the Concierge channel per day, shortly after the Globex Open. But Sunday night at 6 p.m. Eastern, the Logic channel goes to work, and that thing's spitting out trade alerts around the clock, right up until Friday afternoon at 5 p.m. Eastern. Okay, so no trigger on the long side for Concierge. Triggered on the short side, 33.62. Now, over here, we talked about this in the pre-market session. We actually had a trade that took us, it was, I believe this candle here, it was 2 points, but then we issued caution because we thought we would run into good support. For two reasons, here and blue and climbing. Remember, just like on the daily chart, when price comes down to blue and climbing, we expect that to be good support. So we did exactly that, and then good support took us back up to good resistance. Now it took 3.5 plus hours to power through that zone, to power through that BBC. We're on top. We just pulled back, pulling back to the BBC and pulling back to the zone. Should be good support. The first test of that good support is that we take out these highs, and then we've got a trigger right above in the channel. Okay. All right. So that's everything on the S&P for right now. Again, if you have questions, be sure to put them in the chat box. Let's go to the Dow. The Dow has been sort of sleepy sideways as well. All right, on the Dow, consider being along 28005. That's up here. Looks like we may not see that today. $28005. All right, John, I'm going to open the mic in a second here. Thank you, Bill. I'll get your mic open in just a second, John. Hang on. 27,770. Okay. Let me finish up with this one, John. I'll get your mic open. Sell 27,770. Okay. And it marched right down to where we had highlighted as potential support. From 770, we went down to, let's just call it 600. It's 592, but for the sake of math, we'll call it 170 points, $5 a point. That's $850 per contract traded. So if you took that trade with one contract, you just covered 2 months being a passport holder. Now, it's very important to understand the new passport offering, which is for a very limited time. It's not a payment plan by any stretch. The passport is still $5,000. If you want to rent it for $97 a week, you can do that for as long as you want. However, if you ever want to own it for life, which means you own everything for life, even the indicators, price tag remains the same. The payments you've made at $97 a week, that's not like going into some savings account, that's going to be applied to the purchase price. The idea is to give you an opportunity to have, most of you have taken 10 trials or more, okay? So once you have a vested interest, then you're probably actually going to show up every day, pay attention, ask lots of questions, because learning how to trade is not a spectator sport. It is very much audience participation. So at what point are you willing to actually become involved in your desire to learn how to trade? Because I'm telling you, nobody's going to do it for you. What we have done is we've done everything we can to make it as simple as we possibly can. So what special skill set did it take to take this trade last night that was published to all of our members? You had to be present, you had to click the mouse, and then you had to take the profit. Okay? Trading's not easy by any stretch, but it can be simple. All right, John. Sorry for keeping you on hold. Now, guys, after we talk to John, we're going to still recap the Russell, the NQ, gold, silver. We'll cover everything. All right? So stay with us. Let me get John's mic open. John, you're muted on your end, so you got to hit that mute button on your end. Hey, John. All right, I guess I can just keep going then.
How's that? Is that,
there you
is that
are.
good?
Yeah, gotcha.
Okay.
Loud and clear.
Great.
What you want to look at first today?
How about putting the NASDAQ up, the daily? I want to show you something on that.
NASDAQ daily? Okay.
Mhm.
Let's do it. This is a daily copper, but we'll change that. NQ. Okay, NQ. It's about it's about as strong a market as I think any of us have ever seen. This is a daily chart, guys. This thing has been climbing since we got our bullish cross back on April 7th.
Right. What I wanted to point out is we got 2 days here on the right-hand side of this potential double top, which we called yesterday before that sell-off. And we got kind of a doji going on today. I'm not sure that's going to stay that way because, the sort of MO of this NASDAQ all the time is it sort of goes down and overnight or in the morning and comes back. And, obviously if we go positive today before the close, that would be a big deal. The rest of the markets, the S&P is even a little bit stronger, but I just, notwithstanding, if something came out of left field and we did break down from here, it could be, it could lead to a sell-off. possibly a substantial sell-off, because there's a lot of stocks that are, failing and not looking that great. You've got the gold going down. We called it yesterday 2680, if you remember. Or was it 2780? I forget. But I think it was 2780, and we've come down quite a bit since then, almost $2. And if you look at it, how about putting up Royal Gold, RGLD?
Sure. 11,040. Guys, down to about 10,940. So that's a potential 100-point move that we're looking at here. If we can get below the support, it all hinges on that. If we can get below that support, 100-point move down to the BVC. That's $2,000 per contract traded. Okay, John. Tell me again which one you want to look at.
RGLD.
RGLD. I already got it loaded. Here's a daily.
Oh, okay. I mean, look, this. You see what I was saying yesterday? If that green up day gets negated, I mean, it really turns this thing pretty bearish. We got a double breakaway gap from the highs to the downside, and 9 times out of 10, when you get a formation like this, it probably could take a big spill.
Do you think this is based on the price of gold, or is there something else afoot over at Royal Gold?
Well, if you could actually put the gold chart back up itself, I think that that formation we referred to yesterday is, and look at that. I mean, this is a big gap, and right, and it really looks pretty dangerous, frankly. So I think on the gold itself, on the futures, and it could spook the market too. If you could go back to the daily,
Sure.
or maybe a 4-hour chart or something.
Yeah, I just want to show everybody where the trigger is on this thing. 1939, guys. The swing low so far is 1939.1. So if we fail 1939, that is the number. Okay, and that was the Concierge Trade Alert last night. You got potential support at 1935, so that's a $400 per contract move. Potential support again at 1929, and then it's a walk right down to that weekly zone, the lowest weekly zone for this week, 1914/15. Okay, John, let's go back to the, you say daily gold. Here we go.
No, the actual futures, the future.
Oh, you want the futures? Sure.
Yeah.
There you go.
Okay. The way it looks to me, and we talked about this yesterday when we were at the high, is we've had an A wave, pretty severe A wave down. This sort of a B wave, and I'm not ruling out. I mean, we actually had a little bit of support here, possibly, but could we get back up? I mean, if we did get back up before the day's out, it could change everything. But if we go lower, I mean, it kind of portends a move down to about 1800, from here, possibly even 1750, and then a rebound off that. If you can put the silver up,
You bet. Silver.
I think if that happened, and look, this happened prior to the top to the crash, rather, in March. We had a kind of a double top, I think, we had a top like this. We had a big correction and went roaring back, and then we made a double top. It could happen again to these things, but the silver is even worse than the gold. See that? We've already taken out this.
Yeah, silver looks like we're going to get another leg to the downside, probably back down to at least 1630. 630. That's a 20-cent move, guys. And silver pays for every 2 pennies of price movement, pays $100 per contract. Yeah, which one do you want to see?
This is
silver,
the futures.
daily
The futures.
Yes, this is it.
Yeah. Okay. So, I mean, it's a bit. I don't understand these numbers here. Anyway, obviously you can see the possibility of this coming. Remember, they were dumping the heck out of this thing a few days ago before this rally, and generally speaking, it's fairly rare to just get a one hit deal. You know what I mean?
Silver's currently trading 25.98.
Yeah, that's better. So again, because we're either going to go down and test the 20, or even the 19, or maybe the 22, somewhere in around there, 22, 23, maybe a double bottom. But it's starting to look a bit heavy, this thing, and a lot of people calling me yesterday wanting to buy gold, and I told them to stay away. It's just didn't look too good to me, and so far it's proving the case. Although, look, we are getting a little bit of a support here. So the way these things
let's see, 26.64. That was our short number last night. 26.
Yeah, it might be worth looking at the platinum too. Just look at the platinum, because this platinum, it's kind of the key to the market. I don't think we're going to get a really another mega advance until platinum gets over 1,000.
So you wanted to look at platinum, did you say?
Yeah. It really is. Well, you could argue that in the way we came off this base, we had a kind of a 1-2-1-2. So I wouldn't. And by the way, platinum is kind of acting stronger than the rest. So, I mean, if we did turn up and start heading back up to 1,000, you'd have to go with it. But on the other hand, if there is a larger correction at hand, then we're potentially set up for it. So it's really, it depends on how the market reacts going into the close this afternoon, and whether we're going to get some kind of an upside over the weekend, or whether it's going to be like last weekend when we actually started the sell-off again, which potentially is likely or possible. So it's a little bit tricky. Actually, take a look at Twitter. I see Twitter's going. Twitter looks kind of interesting as a PW2R. Looks like it could break out to the upside. They're trying to pursue this TikTok deal, which I think hasn't been factored into the price yet. If you can have a look at Apple, AAPO. Yeah, you see that kind of doji there. It looks a bit, once again, the ability for this stock to keep climbing is just remarkable. And certainly, I mean, we're only down 8 now. This NASDAQ could be positive in 5 minutes. So it's really looking to me like we're probably going to break out here to new highs, unless something really bad happens over the weekend. So
guys, that short on silver that I just showed you, Concierge Trade Alert last night, if you were trading one contract, the profit available was $4,200 per contract traded. We're catching a bounce right here, which could set us up for the next alert.
Yeah. So, these bounces, they can come out of nowhere, and they can move pretty quick. We've just gone from 1940 to, we just got about $10 on the gold, just like that, $1,000, and same on the silver. So it's, you gotta have your wits about you. Coffee, could we look at coffee, Dwayne? Just to take a quick look at coffee.
Betcha. KC. There we go.
Yeah, it's not actually reflecting the rally that just happened, I don't think. Is that
I don't think my coffee. I don't think I have the.
Yeah.
I have
not
because I
the
don't trade
futures.
coffee, so I have a delayed feed on that.
Yeah. Lumber.
Lumber was on fuego yesterday. There we go.
Still is. Yeah, amazing. That's all-time record highs by quite a bit. $100. It's $100 above its previous high now, which is incredible.
As we talked yesterday about this boding well for the housing market, back in the real estate crash of 05, 06, wherever you calculate your loss from, the price of lumber on the futures market, the price of lumber had fallen below the cost of production. Now that's a rare thing to happen. And, well, look what the markets foretold us about the future of the housing market in America. I mean, they practically they could barely give away lumber because nobody was building anymore. Party was over.
Well, that's where we were back in April. So
Yeah, and so now to see this happen, where is this incredible recovery going to come from in housing? I don't know, because every headline practically that I read talks about the mass evictions and the mass foreclosures. And remember back in 07, 08 when you could buy, houses that were selling for $400,000 a year previous, you could pick them up for half price. Sometimes you could pick them up for a third of the price. If you found a housing subdivision where the builder had gone bankrupt and the work had just stopped, sometimes you could pick that stuff up 20, 30 cents on the dollar.
Could we look at the sugar, Dwayne?
Yeah, we sure can. Let's try that again. Sugar. Old number 11. That the one?
Yeah, it's actually making a new high today. So, and they got this tropical storm heading for Cuba. So it's probably not a bad idea to take a shot at it. But obviously, it's gonna. We've been talking about sugar recently as
no, we don't get sugar from Cuba, right? Is there still a trade embargo in place?
Well, it's part of the world sugar price thing,
Okay.
So it factors in cotton, CT.
Let's see what we can find. Cotton number 2. I think that's.
Yeah, I guess so. Yeah, there was a bit of a pullback here the last couple of days, but I think cotton's probably going higher. And if there's a storm, anywhere in the Mississippi or Louisiana area, probably going to see a jump in cotton prices. And lumber as well. Lumber itself is a pre-storm buy, if you like. So.
Now, a lot of these malls that are sitting vacant, speaking of real estate and lumber and so forth, Amazon is talking about taking a lot of these abandoned malls, and folks, there is an abandoned mall coming near you if you don't already have one. The anchor tenants have left, and once the anchor tenant goes, there's no reason for the small mom and pop shops to stick around. So you're going to have these huge hulking pieces of commercial real estate. Jeff Bezos says not to worry. He's going to come in and turn them into fulfillment centers. So because I'm within 5 miles of an Amazon fulfillment center, if I order something this morning, chances are I'll get it delivered this afternoon. And because I'm a Prime customer, I don't pay any additional for that. But if he goes through with this, look at how much money Amazon will save by not having to build these fulfillment centers from the ground up. Man, what a godsend it is for him. And pretty soon, everybody in America practically will be living within one-day delivery range of an Amazon fulfillment center.
Yeah, a friend of mine is actually working on an Amazon facility right now. Just called him in he does the construction of these things, and he got booked up for the next couple of years.
Wow.
High demand. And look, the gold.
I suspect at some point Jeff Bezos will privatize the Postal Service. I think that'll be one of his next ventures or forays.
Yeah.
It'd be hard for anybody to do a worse job than what the U.S. Postal Service has done. And if we got mail carriers in the audience, you're out delivering the mail, doing your job, working hard in the heat, I respect you through wind and hail and sleet and snow. I'm talking about the people running the business of the post office. What did they lose, $9 billion last year?
A huge amount. They've been losing forever. Anyway, listen, there's a news conference coming up with Trump in a minute. So,
all right, so you're going to jump off and watch that?
Wish everybody a happy weekend and a great afternoon, and good luck with the trading.
Okay. God bless, John.
Thanks.
Have a great weekend. Glad you're feeling better.
Thank you.
Okay. Now, so far, we've covered the S&P and the Dow. Okay. Now the Dow's getting up to that make or break number that we discussed this morning. Okay. Wants to go higher. All we got to do is take out these swing highs. And then there's an alert in the channel to take care of this little window of opportunity up here. Okay. So let me get back to the alerts, the concierge. And then let me find the chat box. Valerie, I don't see anything in the question box. You said there was a question. That's why I'm trying to answer it. Is it in Telegram?
No, here in go to webinar.
Okay.
I don't see. I think Paul may have stepped out. Maybe that's why you don't see it. He was just curious on your recommendations for.
Oh wait, I popped it out. Now I can see stuff. Now,
Okay.
Now I can see stuff. That was weird. Okay. Let's see. Okay, so that was from somebody else. How's that? Okay. Hey there. Been following you guys off and on. I've always shared about you guys to most of my friends who want to test the water. One thing I would want you to confirm for me is US $2,000 would be sufficient minimum to start trading. Good. Okay, all right. So the question Paul's asking is, 2,000 will open an account. I believe that's the minimum amount necessary for you to get an account open at Daniel's Trading. Now that's the broker we use. If you choose to use that broker, we don't get a finder's fee. We don't get a split of the commissions. We recommend Daniel's Trading because of Bert Schlichter. He's been our broker for many years. He's such a down-to-earth guy. I don't know who your broker's been in the past, but typically when you call, you don't ever get to speak to the broker. You might get an administrative assistant, probably somebody that's never placed a trade in their life, and they've got a manual and they try to answer your questions. What's different about Bert is if you call him at 866-928-3310, he'll actually answer the phone. Not only will he do everything in his power to help you, he uses our methodology, he uses our strategy, he uses our indicators. He actually trades for a living. He's a broker and he trades. Multiple income streams. That's biblical. So, yes, you can open an account for $2,000. Now, in the beginning, you're only going to be trading in sim. Remember, as you're learning the methodology and strategy, your trading each day is done in the demo account, in the simulator account. When you have a funded account, then you have unlimited access to the demo account. So it's not until you've put together your 10 consecutive days in a row and you're ready to actually go live, only then do you need to worry about, do you have enough money in the account to support your trading? So let's say you're going to trade the S&P 500. Take a look at what the margins are. Think about drawdowns, and this is a conversation to actually have with Bert because he's the broker. My personal recommendation is that you should open an account with $5,000. This gives you plenty of cushion. You're going to have room for drawdowns. You're going to have room for stop outs. But when you go live, if all you're going to trade is the S&P, your goal is to increase your account balance by $2,000. Could you do that with $2,000? Well, again, on every alert, we don't risk more than $300 per contract per trade. If you had 3 or 4 trades in a row that got stopped out, that would put you in peril. So my advice, get your account open with $2,000 so that you have unlimited, unfettered access to the simulator. You can put on and take off trades all day long, around the clock. And while you're learning the strategy, save up another, at least a couple grand. Then put that in the account when you're getting ready to go live. If you follow the blueprint, it will be very difficult for you to blow up your account. I'm not going to say you can't do it, because you can. If you follow the rules in the blueprint, though, you're going to have to break a lot of rules. You're going to have to work very hard to blow up the account. Because once you go live, the second you have 2 days back to back in a row where you don't reach your goal, 10 trades or less, you come out of live, you go back into sim, not a walk of shame. You book a mentoring session with myself or Michael or both of us. We will walk through all the trades you took to help you understand why you had 2 days back to back where you did not reach your goal. Was it you or was it the market? We'll help you figure that out. Once you trade now for another couple days in sim, get your confidence back, you'll go back to the live account right where you left off. Now that rough patch, it could happen on the first contract or the third contract or the fifth contract. So once we help you troubleshoot the issue and you go live again, you don't have to start at square one. If you were trading 5 contracts when you hit your rough patch, after we get you squared away, when you go live again, you're still at the same spot, okay? Remember, you never add an additional contract unless you're underwriting it, paying for it, profit you earn in the market. So get $2,000, that's plenty, that gets your account open, unlimited access to the sim, to the to the demo account, or the simulator. And then save your money so that by the time you've earned the right to go live, you'll have enough cushion in your account that if you do have a couple drawdowns, a couple stop outs, it doesn't freak you out. And it doesn't blow up your account. Okay? So hopefully that helps. All right. We're on the Dow. Last night's alert for the Dow. If you didn't get a chance to grab a screenshot earlier, if you want one, I'll scroll it back up here. S&P. So last night, as I explained earlier, you would go to your chart, you would draw a line in the sand at 33.85, draw a line in the sand at 33.62. Okay. After you do that, your chart's going to look like this. Line in the sand at 85, line in the sand at 62. Everything in between is price making up its mind. And the logic alerts will walk you down to this area and also walk you up to this area. Okay? That is your daily fixed support and resistance. The BBC, that's dynamic. Okay? All right. Back to the Dow. Long side of the Dow. last night, 28005. Up here. Short side, 27,770. $850 per contract traded. Traded all the way down to 27,592. $850 per contract traded. Go to Russell. Okay, last night's alert on the Russell. This morning during the room, we mentioned that the Russell was approaching the bearish cross and the weekly trading zone. We said that is going to be good resistance until price can close above it. Bearish cross just happened to be right at the weekly trading zone. So that's two reasons why the market is having trouble getting through this area. We've spent 1, 2, 3, we're in the 4th hour now, trying to get through, trying to close above. And we need to print 1583 before we start thinking about going along. Okay? So the alert was to be long 1585. That's your line in the sand. And the short side was 1575. $15.75. All right, for 1575, we dropped to 1561. So that sounds like 14 points. Points available. Russell pays $50 a point. $700 per contract traded. Now, once you've earned the right to trade 10 contracts, that becomes a $7,000 move. The worst possible thing you could do, though, is just because you have money in an account doesn't mean you're qualified to trade 10 contracts. I already explained the process. Got to put together 10 consecutive days in SIM, go live with one, increase the account balance by $2,000, then you add your second, then you add your third. It takes about a year minimum to go through that process, one contract at a time. But once you earn the right to trade 10 contracts, this $700 move is $7,000. That's just a function of math. It has really nothing to do with our strategy or methodology. Just a function of math. In the beginning, we encourage you to set a very humble goal of 2 points a day in the S&P, which is $100 per contract. That would be 10 ticks in crude or 10 ticks in gold. $100, right? Now, probably you can't pay your bills and feed your family on $100 a day. You're learning how to trade, right? So when you increase to 2 contracts, now it's $200 a day. By the time you've earned the right to trade 10 contracts, that's $1,000 a day. That's $250,000 a year. That would put you in the top 3% of all wage earners worldwide. And quite frankly, not everybody can handle the pressure of making that kind of money. When it comes to trading, taking a couple points out of the day is about 5% of the equation. The other 95% is dealing with all that noise between your ears. All the reasons why you can't. The wouldas, the couldas, the shouldas. Okay? At some point, you just have to put your foot down, draw your own line in the sand, and say no more. I'm not going to chase these parlor tricks anymore. I'm not going to be some trained seal jumping through hoops at the circus. I'm going to learn how markets work I hear it's very simple. I'm going to learn the principle. I hear that's very simple. I'm going to learn how to trade. I'm going to learn how to take a couple points a day out of the market. And as I continually do that day by day, I'm going to build my account size. And when the blueprint tells me I'm ready, I'm going live. And when the blueprint tells me to add my second contract, I'm going to add it. And when the blueprint tells me to add my 10th contract, I'm going to add it. Now, there's never any pressure to increase the number of contracts that you trade. You know what? If you get up to 5 contracts, and that's bringing you in $500 a day, $500 a day of income you didn't previously have, some people are very comfortable with that. $500 a day, 5-day week, $2,500, 10 grand a month. You know, for some people, that would pay all the bills. For other people, it makes for a very comfortable retirement. But let me be the first to tell you, trading's not easy, but it can be simple. Those who come to us with a clean slate, in other words, you haven't been beat up and bruised and lied to and ripped off by all these other organizations out there. You know, so many people come to us with so much emotional and psychological baggage. First thing we have to do is help you unpack all that baggage. We help you carry it out back. We douse it in gasoline and we set it afire. You've got to get that out of your head. You've got to let the past be the past. Don't let the past destroy your future. So if you're new to trading, then we have a clean slate to work with already. But if you come with all that baggage and 72 indicators and 38 oscillators that you can't live without, I'll do my best to convince you that it's that stuff that brought you to this place. So, hey, you can always go back to it. But you can also push it aside for a minute and look at the elegant simplicity. Learn how markets actually work. Become very adept at knowing what the next high probability move in the market is. Right here. We just took out these swing highs. We're taking out this bearish cross. Okay. If we trade 1583, that'll take us up to our trigger at 1585. We already got a trigger out in the channel at 85, but I'd be comfortable 1583 to 1585. I'm not going to put that in the channel. I'll just type it on screen here. Now, has the S&P overcome? Better make that 1583. Come on, guys, if you've got questions, get them in the chat box. There's some questions. That is correct, Paul. And I see that, I guess Valerie answered you, but yes, you got it right, Paul. If you have any more questions, let me know. Okay, 1583 to 1585. All right, we should see this happen right here in real time. And at 85, we've got a trigger that takes us up to 87. Okay. It's the Russell. Now, the short side of the Russell, the market made 14 points available right down to the area we identified as potential support. That was both Concierge and a logic alert, as I recall. $700 per contract traded. Now the S&P, see this bearish cross? We're still dealing with it. Still dealing with it. We're above the BBC. We're above blue and climbing. All we got to do is take out this previous swing high. Okay? This is a microcosm of the very thing we have going on the daily chart. Markets are fractal in nature. What you see on a 1-minute chart, you'll see on a daily, you'll see on a weekly, you'll see on a range. Markets are fractal in nature. So, NQ. Last night's alert for the NQ was to be long, 11225. 11225, and that happened right here. 11225, and we put in a swing high at 1237. 1235, that would have been 10 points at $20 a point. That's a $200 per contract move. On the short side, the number was 11,121. And the swing low was 96. So let's see, from 111.25. So we got 25, basically 30 points, $20 a point, $600 per contract move. Now prices pop back up to the weekly zone and the BBC. We expect both of those to be good resistance. So the next high probability move is back down to the zone below. Obstacles in our path are this swing low. Once we get below this swing low, then we have nothing to restrict us from making the move right down to the zone. Price is always trying to get to a weekly trading zone. When it's above the BBC, it's trying to get to the zone overhead. The zones are an area. And when price is below, it's trying to get to the zone below. Now, because the BBC and the zone are so close together, not a lot of distance, but it has just done what we would expect it to do, to go from the BBC to the zone. The question is the zone now going to turn into support like it did here? Is price going to work its way through? Is it going to trigger the CTA a second time? Is it going to take out this swing low? Is it going to take out this potential support? And is it going to make it to this zone? By the end of the session today, price, if it ever really wakes up, will either be on its way to the zone overhead at 280, or it will be on its way to the zone below at 037. But as long as it sits still like it's doing right now, I'm not going anywhere. Okay. All right, so that covers all the indices. Crude oil. Last night's alert for crude was to be short 42.25. Which is right here. $42.25. Okay, $42.25 took us down to call it $41.75. That's a $500 per contract move. Over here, we had blue and climbing below us. See, on a short, you want red and falling. So when we trigger here, it is a valid short. Just got to remember that when you hit blue and climbing, it's probably going to be support, and it was. And it pushed us back above the trigger, right? And so again, coming down, we know that's potential support, so we need to get below it. We need to take out these swing lows, which we did right here. And now we've gone from 41.90 to 41.70. That's a $200 per contract move. From the entry at 42.24 to 41.70, that's a $500 per contract move. Let's go to gold. Okay. Swing low, 1939.1. Last night's alert, 1939. Came with it one tick of triggering. Haven't triggered yet. The long side for gold was 1977. And we haven't been there yet. last on the agenda, silver. High hope. Last night's alert on silver was to be short. 26.64. Right here. Short. 26.64. Okay. So the initial drop just took us down to 26.39. So that's 5 cents. 2 pennies is $100. So that's like $250. Then we get a little repeat. This time we got red and falling overhead. We make the move from 64 down to 25.78. And show you how to do this in case you forget. Silver. Sell short. One contract. Opening price 26.64. And the swing low 25.78. Then all you got to do is hit the calculate button. $4,300 per contract traded. Right there. $4,300. Silver has been incredibly kind these last few weeks. Now, when it's moving higher, we love it because it's moving. When it's moving lower, we love it because it's moving. When price gets above the BBC, we anticipate higher prices. Once price gets below, we anticipate lower prices. Some people tell me, dude, I've spent 10 years and 100 grand trying to learn how to trade. Don't try to tell me that it could be this simple. Okay, I won't. If you don't want to know, I won't tell you. But I would certainly think after spending that much time and that much treasure, you might like to know if there actually was a simple way. But you see, then ego comes into play. Then people, they feel bad. Oh my God, what's wrong with me? I spent all this money and all this time, and here it was right in front of me all the time. Why didn't somebody just show me? Why didn't somebody just teach me? That's a problem. 9 out of 10 new traders fail because they don't have a teacher. I don't fly airplanes because nobody's ever taught me. I don't do brain surgery because no one's ever taught me. I don't attempt to fix the plumbing in my house because no one has ever taught me. Well, the good news is there is someone willing to teach you. It's called a business. It's not a charity. It's a business. We trade, we put on and take off trades all day long. The Bible says the man should have multiple income streams. In fact, it even says you should have 7. So the more income streams that you can build in an area that you have knowledge of, maybe it's automobiles for you. Maybe it's real estate for you. Maybe it's farming for you. For Michael and I, this happens to be the markets. Okay? So we can trade. We can teach people how to trade. I can write a book, which is now officially about a half a year late coming off the press, but I'm still pressing on. Multiple income streams. That's very important. Every book you ever read written by some of the generational wealthy, like Rockefellers and Trumps and the Mellons, there's always a chapter devoted to multiple income streams. Never put all your eggs in one basket. However, as you develop the multiple income streams, try to find a stream that allows you to use the knowledge that you already have, the thing that you're already good at, the thing that you already understand. See if you can't put together 7. I bet you can. Just got to think a little outside the box. Maybe you know how to fix cars. Maybe you're a great mechanic. You don't want to just be a mechanic all your life. Not that my stepfather was a mechanic. It's a very honorable profession. But if you can fix cars, then you could probably go to the auction and buy cars. I mean, every city has weekly auctions, whether it's confiscated police cars, you know, cars that were confiscated by the police, or however they end up in these auctions. Some come from dealers, I guess. I mean, if you're truly a great mechanic and you've got a great business fixing other people's cars, then maybe you go to the auction. And because you're a good mechanic, you know which cars can be fixed relatively cheap. So you bid on them, you buy them, you take them back to your shop. You got mechanics there, you got yourself, you fix them, you shine them up, you make them look pretty. You rent the vacant lot next door, and boom, Joe's mechanic shop just became Joe's used car lot. Now, you got the cars being fixed over here. You got cars that you just fixed up, that you've given your personal seal of approval. You're selling them over here. You're creating jobs. You're having to hire more mechanics. You're having to hire car salesmen. Well, a lot of the people who come in to buy your used car, maybe they can't pay cash for that car. Maybe they even have a hard time getting a bank loan. Wow. That little office that's vacant on the other side of the vacant lot you just bought, well, that's where you open up your easy financing company. See, you thought all you could do was turn wrenches, and I just helped you build 3 profitable businesses that there's great demand for. People are always going to be looking for their next car. Okay? So, I guess if there's another vacant lot on the other side of the easy financing building, there's probably some young men in your neighborhood who need their first job. Throw in a car wash, detailing, put that carnauba wax on there, shine up those white walls. See what I'm saying? Now we got 5 businesses. Well, of course, before anybody drives off the lot, the car has to be insured because you're financing it, right? What if they go out and get in a wreck? Somebody gets hurt. You got to make sure that car is insured before it leaves the lot. So I don't know, maybe if there's enough room in the financing company you just opened, put in another desk, hire somebody with an insurance license, boom, what are we at now? 6 businesses? And you thought all you knew how to do was turn a wrench. Think outside the box. See, I'm saying all this because I know that trading is not the answer for every person. But I do know that God has a divine purpose for your life. Some people will be able to finance the dream, finance the vision through trading. But just as not everybody's cut out to be a great mechanic, not everybody's cut out to be a great trader. Seek God. Let Him show you the way. If His way is for you to do all those things in the automotive industry I just talked about, if you come before Him with a broken and contrite spirit and ask Him to show you and lead you and guide you, by the power of the Holy Spirit, He will. Doors will start flying open left and right. You'll feel His hand at your back. If He's calling you to something different, maybe it is trading for you. Only way you're going to know for sure is give it a whirl. Now, by giving it a whirl, I don't mean just sign on to some chat room. Don't just buy some book or some DVDs or watch some YouTube videos and consider yourself a trader. Find a teacher. Doesn't have to be us. If it's not us, good luck finding a teacher because they're very far and few between. I know that a lot of websites promise, training and this and that, and yeah. Well, sadly, too many of you have already been there and found out it was a lot of empty promises. When we tell you that we do 22 hours of group training every week, we actually do it. We show up every day. When we tell you that we give you unlimited one-on-one mentoring as needed, we actually do it. The weekly zones actually come out every Monday morning, 6:15 a.m. Eastern. dating back to December 14th of 2009. If you're tired, if you're sick and tired of being sick and tired, if you're ready to just really learn how to trade, if you want to understand how markets work, if you want to be able to look at a chart and know what the next high probability move is, very simple. Trading is not easy. It can be this simple. Just point your browser to eminifuturestrading.com. Can't forget it. eminifuturestrading.com. We've never offered this before. We can only mentor so many people at one time. Once we're filled up, then we're going to have to just put the kibosh on this for the moment, because we want everybody to have all of the attention that they actually need. So from this page, you can click the payment link. There's a bunch of them all around. And over the weekend, Valerie will send you everything you need to be ready to rock and roll Sunday night at 6 p.m. Eastern. Now, I showed you this earlier. I'll show it to you again. This is what happened last Sunday night. And it was a quiet Sunday night. Some Sunday nights are incredibly busy. 3:13 Pacific, 6:13 Eastern. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades Sunday night. Rest of the world still waiting on Wall Street to wake up the next morning at 9:30. Some of you already made your money for the week Sunday night. I hope you will join us this Sunday night at 6 p.m. Eastern when the Globex channel opens. Okay? I'll be there. All of our traders will be there, or most of them. I hope you will be too. The journey starts by simply going to eminifuturestrading.com. eminifuturestrading.com. Okay, it is time now for our
The broadcast is now starting. All attendees are in listen-only mode.
good word for the day. Not sure what just happened to the webinar, but something broke. All right. I guess we'll just have to let it go with that. Somebody close the webinar. Thanks. Always a pleasure. Today's good word for the day. Always try to serve others. Ephesians 6:7. Serve wholeheartedly as if you were serving the Lord, not people. A reporter once asked the famous American singer Marianne Anderson to name the greatest moment in her life. She could have talked about the private concert she gave at the White House or her command performance for British royalty. Instead, she shocked the reporter by saying, "The greatest moment in my life was the day when I was able to go home and tell my mother that she wouldn't have to take in washing anymore." We are all innately self-centered, thinking first about our own interest. That's why we must be transformed by the renewing of our minds. Romans 12:2. Psychologists talk about natural behavior and learned behavior. When you're naturally negative, you must learn to be positive. When you're naturally fearful, you must learn to be courageous. When you're naturally selfish, you must learn to be generous. God wants you to go through life looking for opportunities to bless others. Therefore, as we have opportunity, let us do good to all, especially to those who are the household of faith. And that's what we have here, a household of faith. We have a community of believers. That's Galatians 6:10. Now, you're not just to do it to people, you're supposed to do it through people and unto the Lord. Obey not only when their eye is on you, but as slaves of Christ, doing the will of God from your heart. Serve wholeheartedly as if you were serving the Lord, not people, because you know the Lord will reward each one for whatever good they do. Ephesians 6:6. That means what you make happen for others, the Lord will make happen for you. And that's our good word for the day. Again, sorry about the disruption in the broadcast. Don't know who shut me down, but somebody just accidentally clicked end webinar instead of leave webinar. These things happen. Have a great weekend. Go to EminiFuturesTrading.com. Become a part of the CFRN family today. This way Valerie can get you all set up over the weekend, all the links, the passwords, indicators, charts, everything that you need to rock and roll with us come Sunday night. Alrighty. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.